Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Coromandel International, a leading fertilizer company, and let's understand how the numbers are and whether you should invest in the company or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. A request from me to all your viewers, all the viewers, that kindly support me on Patreon so that I can build the channel even further. I'm in really need of funds in order to continue with the channel, and support through Patreon would help me gain more traction on the YouTube channel. So kindly support me on Patreon, even with $2 a month would help me a great deal. Now about Coromandel International. This was established in 1961 and they provide crop protection products along with fertilizers and phosphate solutions. So they are into this agriculture domain and providing different types of fertilizers and crop protection products. Mainly produces pesticides and specialty nutrients. So they are on the both sides, that whenever farmers wants to grow different kind of crops, they are providing nutrients and phosphates, etc., and also they are providing a different sort of pesticides in order to protect the farm yield, whatever yield that the farmers come up with. The management is really good and it is a top class management, very transparent, and it has very good pedigree, and over the years it has managed to grow the company from being only about 4-5 thousand crore company to a market cap of 20,000 crore at the moment. If you look at the financials of the company, then the sales of the company has increased just by 7% over last year. So FY20 numbers have been, actually this is December FY20 numbers, and 7% growth in that, where the profit has grown by 74%, and these are because of a couple of reasons. One is the tax cut that has taken place this year by the government, that the companies would have to pay lower taxes. Second is their debt has increased, although it is high debt company, but the debt has reduced from last year, so around 20-25%. And the third point is operationally the company has done well, so the operating profit has been good, and that has percolated down to the profit level, the net profit level. The return on equity of the company is pretty strong at 23.7%, whereas the operating profit margin is at around 12%. So operating profit margin is not that great, but look at the return on equity of around 24% or so. So the performance of the stock, if we take that into consideration, then the stock is up around 90% in the last 6 months. So it was trading at around 330, 325, 335 or so levels in August. And from then we have seen a big move in Coromandel International, and we are seeing the stock at around 620, 630 levels. In just 6 months, it has gone up 90%. Numbers have been robust in the last couple of quarters, and the operational numbers have been pretty good, and that is why the company has done well on the bottom line. And so, company is doing well operationally, and they have reduced, you can say they have increased efficiency, reduced cost in order to come up with these sorts of numbers. Profits are expanding while sales are flat, although this is a kind of a concern in one way, that that the sales needs to expand for a company to grow further, and people would look at the sales number even more closely. But 1 or 2 quarters you can, I mean, avoid looking at it, and probably you can give it to the company, but look at the bottom line expansion that the company has seen. The dividend payout ratio is pretty healthy, and that also goes well for long term investors, that they are paying very good dividend on the kind of profits that Coromandel International is making. So why I believe it is a buy on decline? It is a market leader in its space. So the kind of nutrients that it provides, the phosphate nutrients, they are the market leader in that space. Along with that, they provide crop protection products which are doing reasonably well compared to other crop protection companies, and hence I would suggest uh, buying into Coromandel International. It is a real fertilizer firm making such growth. So I have seen different fertilizer companies which are doing 10 to 15% year on year growth, or maximum 20% growth, but Coromandel International is showing northwards of 25%, 28% growth year on year, and this has been consistent with the company. And that's why I believe now, with a 20,000 crore market cap and the kind of prominence that the company possesses, it is time to buy into it on any sort of decline. So not buy into it at the current levels, but any sort of fall that takes place, 15, 20%, 10%, 15% fall, get into such a company. It will definitely outperform once the economy recovers. So one has to understand that currently the economy at 4.5% growth would not show such numbers for companies like Coromandel, who provide fertilizers, because the farm growth need to increase, the rural growth need to increase for farmers to buy into better fertilizers and phosphate products, etc., and crop protection products. So once the economy really improves, this will go even this will get even bigger, and hence these are the times to accumulate. Although the stock has run up but on declines, this is the time to accumulate such a stock. The valuations are attractive at 19-20 times, so it is not that it is expensive, and that is why I am suggesting buying into it, because at 18-19 times current earnings, and probably 2 years down the line, it is trading at 12-13 times. This can easily trade at 24-25 times earnings going further, and you can understand that with the expansion in profits, the EPS will grow even more. So any sort of decline is a buying opportunity. Currently, it is valued at only 2 times sales. Another parameter of understanding any company, which is into such divisions like agriculture, etc., is looking at how much times sales it is trading at. So the amount of sales that it is doing is around 10,000 crore, and the market cap of the company is around 20,000 crores. So only 2 times sales. Not that it is extremely cheap, but probably it can easily trade at 2.5, 3 times sales even on current levels. If you look at the technicals of the company, then there is strong support at the 575 level. So any dip of around 10% is a very good support between 569, 575 or so. The 200 DMA is at 460, so it has run up. That's what I'm saying. That at 630, the 200 DMA is at 460 rupees. Stock is in upswing currently, so there's no looking back. But there will be consolidation and decline in the stock in the meanwhile, and that will be time to buy into it. Take a 560 rupees stop loss, and you can trade even into it on any sort of decline towards 600. Take a 560 stop loss for a further target closer to 700. The long term stop loss can be around 520 rupees or so. I do not see the stock go down more than 100 rupees from the current level. So around 520 is a decent stop loss to maintain on a long term basis, and that's why I'm saying any decline below 600 is a very good buying opportunity with a stop loss around 520. So what needs to be done? Buy on major declines and keep track of numbers, and have a 6-7 year view, and this can make you a lot of money. Have less than 5% exposure. It might not be a multi-bagger, but it can definitely give you consistent returns.